and that is probably having a little bit of a bearing. But broadly, this is a lot of interested buying in the sector. Realty is doing reasonably well, gains of about 1.5%. Metal looking good, up about 1% or so. In fact, like I said, most sectors in the green. We're joined by Lancelot Dicuna this morning, and we will also soon be joined by Rajat Bose. Lancelot, morning. What can you tell us about what you're making of the equity markets right now? Sharp bounce back from the low point of the week, and it means that the domestic investor is buying, is deploying at strategic levels.
Yes, I think there is definitely a demand for equities even at these levels, because with the status quo continuing in the government, we are expecting that policies will continue to be similar, and all these policies are likely to drive growth higher. Similarly, we saw that even the forecast from the RBI, was 7.525, and that is something which is good for the markets, because if you've got a good growth, then corporates will also benefit from that growth. And in turn, economy growing means a lot more opportunity for companies to make higher profits and increase their market penetration. So all in all, I think the outlook has now settled. The event is over, and now we are seeing some kind of consolidation. And there will be, sectors and companies where valuations have become reasonably attractive. And that's where I think you'll start seeing the movement of funds into those sectors and those companies.
Very quickly then, which are those stocks and sectors that you're seeing that currently have value, Lancelot? And then we'll jump straight into the queries.
Yeah, so I would look at, like for example, the IT segment. If you look at most IT companies, they've been flat for better half of 12 months to 24 months. And there has been, while the quarterly results were a bit muted and the outlook was a little bit, difficult for the next quarter, but the longer term outlook, the second half of the current year would be much better for the IT companies. And you are beginning to see, some order wins driving growth, and that will translate into higher, let's say, demand for companies in a similar space. Similarly, I think the private sector banking, private sector NBFCs was an area, even life insurance companies was an area where the last 12 months or even last 2 years has been pretty tough for the space. And some of them were driven by their individual companies' issues. Like you had Kotak Mahindra Bank having an issue on its own. You had HDFC Bank and the merger. So there is still value in those kind of franchisees. They have been producing good results. They're growing, and with improvement expected in rural India, I think a lot of these will stand to benefit on the upside as well. So these are some of the companies that can be looked at being accumulated during the post the volatile period.
All right. Let's jump into the queries. I'm told that we're also joined by Rajat Bose. Rajat, thanks so much for taking the time, and good morning to you. I'm going to start with the first question. Shravya is asking the first question. She's joining in from Vijayawada, and she's asking about BHEL. Would you suggest that she can buy BHEL at this juncture? And she's also saying that she's holding IRFC. So she's wondering whether to hold on to that stock right now. Rajat.
I would say that BHEL actually, on the day when there was a big fall, it went down with a lot of high volume. And this time on a recovery trail, it could not really clear its 20-day exponential moving average. And now it is below even its 9-day exponential moving average. So I wouldn't definitely suggest that she can buy WHALE right now. And regarding IRFC, similarly, I would say, Alex, one thing I would like to mention here is that technically this market is still very overstretched, and the negative divergence on the 14 RSI on the weekly chart is still there. So there would be a correction. There would be a retest of the 200-day exponential moving average. So here, I wouldn't say that most of the stocks you will find that they are either you book profits or you may hold on. If you are a long-term investor, you can continue to hold on. But anybody looking at short-term, this is not the time to buy.
Okay. All right. And we'll get several of the individual stocks also addressed. But the next question we're taking is from Rajkumar. Rajkumar is asking about Borosil Renewables, which he's holding at levels of 564. He's tuning in from Bengaluru. He's asking whether to hold on to this. Lancelot, what's the view on the fundamentals for this stock?
I think fundamentals remain good, but the stock had a stellar run-up in the last year or so, and now seems to have made some kind of a correction, is improving. But if one looks at the business potential, the business is good because you are seeing a movement into the solar space. The government is also encouraging significant investment by individuals into the solar space. And long-term outlook is good. But however, when you're paying a high price, then obviously if earnings do not grow, then maybe some swift disappointments in terms of the price. So one has to be a little careful rather than investing at higher levels. Wait for maybe a correction, and the correction would be a good time to enter this company.
The next stock that we're taking is Waaree Renewables. And this is a question coming in from Amjad. Amjad is asking whether he should hold on. I'm just trying to pull up, where the stock is currently trading. And in fact, it is at 2,192 or thereabouts. He says that he's bought at higher levels. Any view on the charts, Rajat? What should he do if he's bought at much higher levels than it currently trades at?
What is the stock?
We're talking about Waaree Renewables.
Waaree?
Yeah, that's right. It's currently at a lower circuit.
Waaree Holdings, I can't find the stock.
Lancelot, are you familiar with Waaree Renewables? It's currently at a lower circuit. It's trading at 2192.
So I have no coverage on this stock as well.
Okay. So maybe we can circle back and see if we can get Rajat to look at the chart later. But in the meanwhile, let's talk about Canara Bank then. From the banking space, Jay Krishnan from Kozhikode is asking about whether or not it can be bought at the current level. Lancelot, what's the view on the fundamentals of this one?
So I think, yes, Canara Bank is looking good. We have seen good results coming this year. And given that the bank is now, the mergers are complete, and you are seeing, some synergies in terms of the cost reduction, and I think with the improvement in net interest margins, the outlook for the next 12 months would be good, and you would see better results coming in from Canara Bank, and that would drive, valuations or share prices higher as well. So one can look at, accumulating the stock even at the current levels.
The next one is from Pawan. Pawan's writing in from New Delhi and asking about REITs, which has been bought at levels of 550. Rajat, the view on REITs, would you hold or sell this? It's currently trading at 646, and so therefore Pawan's making a bit of a profit.
See, around 601, I think the 200-day exponential moving average is located. It is exactly 598.95. That is a little below the 600 level. This should be used as a stop loss, and one can continue to hold. But if one is holding, if one is already in some profits, part profits may be booked, because I don't think it will go much further up from here. But still, I would say that use a stop loss. Maybe a stretch stop loss would be 598. Otherwise, the stop loss should be below, say, 625. Okay.
RCF is the next counter that we're talking about, Rashtriya Chemical Fertilizers. And it's currently trading at 153, up about 2% in trade. And we've got Prasad, who's bought at levels of 161. He hasn't specified a time frame. So, Lancelot, I'm coming to you on this one. Fertilizer stocks in general haven't had the best time of it over the last year or so. But would you hold on to this?
No, I think if you're in profit, one should look at booking profits, because, fertilizers are extremely cyclical. Also, a lot of the, the pricing gets impacted based on government policy in terms of, assisting farmers, etc. So you do see that, there are periods when they announce good results, but then there are sort of cycles when you will find the company struggling. So in cyclical companies, always better to exit when the results are good, because that's the time, when the valuations are at their peaks or even highest. So one should really look at booking profits and moving on.
If you are very close to the price, but you are in a bit of a loss, would you still say you should book, Lancelot?
I would say then one can wait for the monsoon, because the period after the monsoon is when you would see improved results. And say September results, when they are announced, you would get a better sense of how the companies performed. And given that the outlook for monsoons at the moment is positive, one can afford to take that call and wait it out for the next 3 months and then decide.
All right, we have to slip in a very quick break, but on the other side, we'll talk about a development from today's RBI monetary policy, where there is a change in the definition of bulk deposits, and this will affect a set of deposits. Lancelot, as well as Rajat, thanks so much for joining in, and we will take this forward the next time we meet. Do stay tuned, viewers. We'll be back on the other side to talk about bulk deposits. Welcome back. You're watching NDTV Profit, and it is time to address a significant change that was announced in the RBI monetary policy. Outside of monetary policy, it has to do with the definition of bulk deposits. The limit of bulk deposits has been hiked to 3 crore from 2 crore, and it is a significant development. So let's talk about what this means, not just for depositors, but also for banks. I'm joined now by Subrat Kumar, who's Executive Director at Bank of India, as well as Mohit Gang, the co-founder and Chief Executive Officer of Moneyfront. Subrat, thanks so much for joining in, and just help us understand what the size of bulk deposits or the quantum of bulk deposits currently stands at. Is this a very popular product?
Good morning to you and all the members on the panel. Thing is that, yes, today it has been announced by the RBI that the threshold for the bulk deposit has been increased to 3 crore. So practically speaking, we are a Bank of India per se is one of the, kind of having very lower level kind of bulk deposit compared to industry peers. And this 3 crore thing is that it's like bulk deposits falling between 2 to 3 crore is very insignificant amount, I would say. So impact on the overall, which is roughly around 13.5% is there in case of Bank of India, bulk deposit as percentage of aggregate deposits. So that may not impact, impact will be very less for us. And as it is bulk deposit as a product for a bank is a product to manage the liability franchise on the bank side, and depending on the market condition, which includes liquidity position and the liquidity position of the bank as well as in the system, bank resorts to bulk deposit. So there are other options also. Bank weighs the pros and cons before tapping this particular window. So like the other product is certificate of deposit also there, interbank in interbank market. So that also we can tap. So it's a product which is available to the bank. It is not like a retail deposit which is there with the customer. So that is the basic difference. So this is what I could say at this point in time.
Just trying to understand a couple of things. What is the profile of depositors that choose bulk deposits? That's one. And two, what is the tenor usually? What is the average tenor of these bulk deposits?
So the profile is like that. Mostly it is a...
Sorry, I think I've lost your audio.
Yeah. Am I audible?
Can you hear me?
Yeah, I can hear you. Am I audible?
Okay, I think I'm
Am I
unable
audible?
to hear it. So can you please repeat what you're saying?
Yeah. Am I audible now? Am I audible now? Yeah. So my point is that this bulk deposit basically the most of the depositors are corporate entities and government institutions mostly, right? And average profile, it varies from bank to bank because it is up to the bank asset liability management section. They decide to tap the bulk deposit, and the tenor will be decided by them only. It is at the bank's discretion. Suppose based on the liquidity position, structural liquidity position and all, right? So average tenor, you cannot say, maybe today I need a deposit for 3 months segment, so I will only tap the 3 month segment. And in case I need for 1 year or 6 months, so based on the liquidity structure of that particular bank, the maturity is decided. Tenor is decided. Okay, and
sorry, I couldn't hear that last bit. So what is the kind of profile of depositor?
I told you that mostly they are either corporate entities or government institutions.
Understood. Okay. So very few. So from that perspective, not too much of an impact. Would it be right to assume then that broadly you would see a reduction in the cost of deposits for the bank?
So that's what I said in the beginning. See, we have to maintain, normally banks maintain a trade-off, which is the least expensive source of funding in case there is liquidity issue or there's some liquidity tightening in the situation, which is the least expensive sourcing proposition. So if bulk deposit, some banks may give better rate. It's like if they want to take, and if bank is not very much interested in bulk deposit, then they may quote the rate which is at par with the certificate deposit rates prevailing in the market. So that's why it's not a specific rate which every bank quotes. So it depends on the liquidity profile of that particular bank.
Okay, fair point. It's also been communicated to me that there are high net worth individuals and ultra high net worth individuals that park money in bulk deposits. So to that end, Mohit, I'm just curious what these individuals would do. We were speaking earlier and you were pointing out that these individuals are unlikely to shift just because of the convenience of it.
Look, I think, bulk deposit do offer a strong bit of convenience if you're parking money and if you're very uncertain about the tenor of your money, right? I think people typically tend to just park it with the bank in form of bulk deposits. My sense is raising the limit from 2 to 3 might not deter that kind of profile who's doing it. But as rightly pointed out, I think it's mostly corporate treasuries, trusts who are doing these kind of instruments. Ultra HNI, yes, they do to some extent, but I don't think so. It's a fairly large market, but yes, whoever is doing, I don't think so will get deterred by this hike in the minimum amount from 2 to 3. Perhaps he's better off because whatever he was parking and fetching rate on, he can park some additional funds and fetch rate on that also.
And assuming that there are individuals that are choosing to currently make bulk deposits, would you say that it's more efficient to shift to other instruments? If so, which instruments?
Look, Alex, it's always been more efficient to shift to other kind of debt instruments. However, the fixed deposit market we have seen has been fairly sticky, right? And for various reasons of safety and comfort, right? But if you were to shift, let's say an arbitrage fund is a great option. It's a tax efficient mode of parking your funds very, very safely. And the current going rates are, let's say, 7.5 to 8 with equity taxation. That makes it highly, highly efficient. The other option could be corporate deposits, but those are not readily available below 1 year tenor. They're only available from 1 year and upwards. So if someone is willing to park a bulk deposit for about a 1 year tenor, which again is a very small size of market, then perhaps corporate deposits could also be a better alternative. But I really doubt how many of treasuries or trusts or larger institutions would actually go for arbitrage funds, because as a corporate mandate, they're typically barred from parking into any form of equity instruments. But yes, to answer you, arbitrage, number one, corporate deposits, number two, if the tenor is above 1 year, and number three, perhaps liquid funds or money market funds are also great alternatives. They give you a lot of convenience of withdrawal and fetch you almost rates which are identical to bulk deposits, in fact, a little higher than those.
Fair point. So, Subrat, coming back to you, and thank you for explaining this so clearly, would it be right to assume that perhaps the composition to a certain extent and the exposure to bulk deposits over a period of time could reduce, and banks could prefer certificates of deposit instead?
So, see, I can tell you one thing. It is absolutely at the discretion of Treasury, because Treasury always weighs I told you, pros and cons, which product will be suitable to manage the liquidity, best suited at that particular point in time, right? So, it is basically a Treasury product, and they decide. It is not like a retail product. It's different. So, if certificate of deposit is offering a competitive or better rate, bank will resort to the CD to manage the liquidity. It's not necessary to always participate in kind of bulk deposit kind of bidding.
So the final word is that there is not going to be a dramatic impact of this move?
See, the move is that, it depends on the bank. For bank of our side and our side of bulk deposit, our deposit falling between 2 to 3 crore is very insignificant. So it is not going to impact much. That's what I would say.
Okay, fair point. Thank you so much, gentlemen, Subrat as well as Mohit, for joining us and for explaining this to us and our viewers. Pleasure having you on the show.
Thank you for having me. Thank you.
All right, viewers. So there you have it. That's the latest development. We'll have to speak to a few more entities to see what the impact is, but the sense is that for the large banks at least, this is unlikely to have a material impact. And as was pointed out by the Executive Director of Bank of India, a lot of institutions, trusts, as well as certain other entities tend to park money in bulk deposits. It's not so much the individuals that are parking money. And so to that extent, the impact on the depositor will also be limited. But that brings us to the end of this particular edition of Ask Profit. Thank you so much for joining in, and it's been an absolute pleasure bringing it to you. Do stay tuned. Lots more coming up over the course of the day, and this is NDTV Profit.
Well, good afternoon. Welcome. You're watching NDTV Profit. I'm Harsh Saita. Let's take a quick look at where markets are at. And you're looking at the Nifty really doing well. We're going from strength to strength, 1.6% higher on the Nifty 50 benchmark itself. So very strong cues coming through. Let's pull up the top gainers, losers, or the contributories, one of the two. And what we're seeing largely is traction coming in from IT. Infi, Reliance, even an HDFC Bank starting to contribute, and ICICI Bank as well among the top 5 contributors. But IT really is stealing, all of the limelight, at least in trade today. If we can pull up the Nifty IT index and see how that one is performing, you'll largely see that it's going from strength to strength as well, 3.4% higher on the Nifty IT index. The Nifty Bank as well, not doing too bad. Let's pull up the Nifty Bank index as well. Not doing too bad, and you can see live visuals coming straight to you with regard to the press conference of the RBI or post the RBI MPC, and we'll cut across to that as soon as it starts. But sticking with markets, you're seeing a 1% uptick even on the Nifty Bank as well. The Nifty Auto also doing fairly well, 1% plus higher. But we did mention the Nifty IT is the top sectoral gainer though, 3.4% higher. Pharma, metals also doing very well, 1.3, 1.2% higher as we speak. The Nifty Realty also up 1.6 odd percent. So across the board, we're seeing good green. The breadth of the market extremely strong, and we're seeing that within the Nifty 50 pack, we have almost 45 positive contributories to the Nifty. But let's quickly go across and listen in to the governor from the press conference.
Yeah, let's start. So with your permission, sir. Yes, sir. So hello and good afternoon. Welcome to the post-policy press conference. Today we have with us Governor Reserve Bank of India, Shri Shaktikanta Das, Deputy Governors Dr. M.D. Patra, Shri M. Rajeshwar Rao, Shri T. Ravi Shankar, and Shri Swaminathan J. We also have with us Executive Directors Dr. O.P. Mal and Dr. Rajiv Ranjan, and other colleagues from Monetary Policy Department. To begin with, I would request Governor to make his opening remarks, and thereafter we'll move to Q&As. Sir, please.
Good morning and welcome to all of you. Nice to see you after a gap of 2 months. I'm not going to say anything new, but basically what I have tried to do is I have tried to capture the highlights of this